going on, everyone? My name is Lalit, and you've already probably heard about Tesla's 5-for-1 stock split, so what else am I going to add to the conversation? Well, I want to go over how I find future stock splits that happen. I want to discuss the infamous Jim Kramer's stock splits that he says should happen, and finally wrap up the conversation with some stock splits versus fractional shares. Does it really matter? And just for this video, I bought some Tesla a couple days ago on the news of the stock split. So we'll see how that fares at the end of the video. But yo, let's get it. So how do I figure out about future stock splits? Right before that, what is a stock split? I go over a visual demonstration to explain what that is in the video where Apple actually releases their news about their stock splitting. So do feel free to check that out. But coming back, how I figure out about my own stock splits is I use Yahoo Finance. If you go to finance.yahoo.com/calendar/splits, I believe, you should be able to see all upcoming stock splits in the near future, and it's assorted week by week, and you can see how many companies by week are actually splitting. Moreover, the news for Apple and Tesla coming out with this type of news that they are splitting, it may not be on that calendar before the fact. Stocks like Apple, stocks like Tesla, it's huge news and there's huge price action on that type of news. And so that's usually released towards the actual date of when they want to release that and make that news public. Now coming to the infamous Kramer, Jim Kramer, Mad Money. He's a celebrity. I've been watching him since gosh knows when, but like we're talking like years and years and years, and he used to play in my household. And so I've known his voice for so many years, but he basically went over in a segment upon Tesla's stock split news of 10 stocks he thinks should split. So I want to review these and go over what I think about it. But at a super high level, I don't want to disagree with the infamous man, Jim Kramer. But in this case, he does have a lot of validity, even though there are mixed reactions on his news. So let's get into it. So first, he talks about Amazon. If you look at Amazon, it's pretty much expected to split. But again, it's one of those where if you look into the history of Amazon, it hasn't split since, I believe, 1999, and it's split 3 times, if I'm not mistaken. So the point of that is that it's been 20 years, and it split in 98, 99, 99 to my memory. And from there, there's no guarantee that it could split. So he goes on to say about Amazon, about Google, and about Chipotle, Netflix, Nvidia, Adobe, Costco, Home Depot, Facebook, Microsoft. I'm just naming them, but the point is they're all solid companies, and whether or not they should split, it's all about what is the reasoning behind it. And so he talks about new investors, young investors coming into the market because of these stock splits. But in the whole video, he doesn't talk about fractional shares. So what I want to mention is basically if there's a way to get into a stock by just buying a fraction, and if a stock split is just providing the opportunity for a stock to be cheaper to potentially allow investment, then which one is really or truly better, and does it really matter? So a fractional share, simple definition, it's basically implied in the words itself. It's a fraction of a share. And so what I want to use is a case in point, where I want to show you the same fraction of a share I bought of Tesla. That's right, I bought some Tesla, but not many shares, but I bought just a fraction with some leftover money I had in my Robinhood account on purpose, just to prove an example of the price action that happens around stock splits, and also what I expected to happen and what actually happened. So let's look into it. And so taking a look at it, if we scroll down and look at the actual price that I bought it at, over here I have 0.002642 shares, market value of $4.32. I bought in at such a price. Let's see if we go to the history over here. Let's see what we see. I have a market buy over here. $3.82 spent to buy 0.002642 shares at the price of $14.45.87. So now we have it up at $16.35, and from a percentage point, that's 13.8% up. And I bought this day before yesterday, so $14.45 is around this range, August 12th, 9:50 a.m. Yeah, I remember market open yesterday, and it passed a day where it went up, I believe, almost like 10% plus, and today it went up some more, and so overall, here we are at 13.08% profit. The point of this, I really wanted to do this to highlight and show the fact and example in reality that you can actually buy anything as little as $1, specifically on Robinhood, a fraction of a share. But what are kind of the pros and the cons? So the way I want to tackle it is that if you have a fraction of a share, you own the stock. If you get paid a dividend, you get a proportion of that dividend. So for example, if there's a $100 share and you own 10% and its dividend is $1 every 3 months, you'll be getting 10 cents every 3 months for that zero point 0.1 of a share. Pretty straightforward. On the other hand, what if you have, for example, let's think about it. Let's say you want to transfer your stocks from one brokerage to another. What happens if you have a fraction of a share? Generally speaking, that fraction, for example, if you have 10.1 shares, 10 shares would be transferred, but that zero point 0.1 share, it'd be cashed out essentially. So it'd be sold and you would get that amount of money at that market price execution into your account in terms of cash, into your brokerage account. So the expectation is that after the stock split, Tesla's price basically is still going to shoot up. So for example, if it closes at 1500 before the split takes into effect in terms of the actual adjusted basis of the cost, it would be 1500, for example, divided by 5, aka $300 a share. The way I want to put it is that when I started getting into investing, I genuinely didn't buy Amazon because there wasn't a concept of fractional shares. And at the time, I don't remember, but I remember it being in the range of 400 to 800. I know that's a big range, but Amazon moved heavily over a few months to a year in a span of around that 2016-2017 period, and I've been investing just shy of that a little before, maybe just a couple of years here and there. The point is, I wasn't really making that type of money, and to put something into Amazon like that, just a whole chunk, just to buy one share, I really wasn't feeling it. I'm just being really honest. And another thought that got to me was, well, okay, let's say we buy one share just for the future. Maybe Amazon can double. Maybe it goes 400 to 800 or 600 to 1200. The issue with that was I was looking at a very, very not small-minded, but very short-term minded, I felt, where if I had only one share, then, okay, my profit is times 2 potentially at the best case. I didn't really fathom that Amazon could go where it is today, or Tesla could go where it is today, or even Apple, etc., etc. So that was just me learning that type of lesson. But the point I want to express to you and everyone out there is basically that I didn't start because of that barrier, but fractional shares are a thing today so that one can actually take advantage of the fact to invest with as low as $1. And more than that, I would also say that it allows you to start a position. I didn't even start a position in Amazon because of that obstacle, because of that hurdle. And if fractional shares, someone like me, after knowing what I know, I just put that $3.82 into it, but I wouldn't have seen that 13% gain. And if you flip that number from $3.82 to $10, 100, 1,000, 10K, etc., if it was a 10K trade, that's $1,300 right there in 2 days. Had I sold yesterday, that's $1,000 clean if it went up 10% and I sold. So all in all, I would say that fractional shares are a great tool to allow one to get started, and it's something that I didn't have back then. So if it makes sense for you as an investor or your investing strategy, then hey, it's there for the taking. And in the end, this is all for entertainment purposes only, so you know how it is. Overall, I think it's a great kind of move for a company to do, to also show that, hey, we are kind of wanting to work with you maybe. And a lot of people say, this is a quick tidbit here at the end, that Amazon may not want a stock split because they want to say, hey, if you want to be with us, then you got to pay, you got to pay the price. But I also say that you could buy it through fractional shares, and there is no dividend in this case. So does it really matter? If Amazon just keeps going and you want to transfer some Amazon stock from one brokerage to another, what happens when you transfer from one to another? Let's say you have 10.5 shares. Let's say they can't transfer that half share of Amazon, and let's say Amazon, even right now, it's at like 36 to 3,800, and it could be 5K wherever it is. So what's the point of this? You could be cashed out of Amazon at, let's say, 5K valuation in the future, and you'll get 2,500 cash. But if Amazon zooms from 5K to 6K really fast, like how it's going in these markets, how it's climbing, then guess what? You lost a great entry point. And that's assuming you don't get in again immediately, but just the transfer from brokerage to brokerage just may take just enough time that with volatile markets and markets that are kangarooing, that are bullish like anything, but still going all over the place, there's just so much uncertainty. So overall, I wish you well, and thank you so much if you've come this far. And please do drop a like, leave a comment on what you want to hear more about. And feel free to subscribe if you like content like this. I had some coffee before this, so just kind of rambling there, but I hope everything made some sense and there was some value here that you could get out of it. So thank you so much, and we'll talk soon. Peace. Bye. Happy trading.